Hi, I'm Tim Vipond, co-founder of CFI. This renewable energy course is going to be delivered to you by Antoine Bichara, a seasoned professional in renewable energy with tons of financial modeling experience. I really hope you enjoy going through this course with him. This solar financial modeling course covers the most critical concepts in evaluating a renewable energy project. This is an advanced course that will guide you through a case study on a solar energy project, where you'll be given a Confidential Information Memorandum, or CIM for short, which contains all the project details and financials that you'll need to build a model and analyze the return to investors. The outputs from the model will be used to determine whether or not you would invest in this particular solar project or not. Throughout this course, you'll be watching video lectures and building a solar financial model from scratch in Excel by following along. At the end of the course, you'll take a qualified assessment to test what you've learned.
We will begin with an introduction to our solar case study. This solar case study was created by myself, Antoine Bichara, Associate of Corporate Finance Institute, and I've previously held positions that have given me expertise in the renewable energy industry pertaining to wind, geothermal, hydro, solar, as well as biomass projects. In this particular case, you currently hold the position of Vice President Project Finance at Worldwide Power, Inc. You have been contacted by Aurora Polaris Bank about a 25 megawatt DC solar project called Project Phoenix. The original developer has defaulted on the power purchase agreement and as a result is forced to sell the project. The site has been fully developed and the developer has previously performed a Phase 1 environmental site assessment, the geotechnical work, as well as engaged an EPC or an engineering, procurement, and construction firm. The project has reached notice to proceed and is just awaiting financing prior to commencing construction. Your company's hurdle rates for solar projects is 7.5% levered IRR. Projects must achieve this IRR or this hurdle rate prior to any investment. The goal of the case study, and your goal as the Vice President of Project Finance at Worldwide Power, is to determine what fee will be paid to Aurora Polaris Bank for the project. You have been provided a CIM which outlines details of the project. A CIM, or the Confidential Information Memorandum, is used by investment banks when approaching buy-side firms when selling a project. The Confidential Information Memorandum in this particular case contains assumptions as well as pertinent information associated with Project Phoenix. The goal is to use this Confidential Information Memorandum to create an Excel model which covers the assumptions that are provided for you and then uses those assumptions to build a cash flow model as well as an output model which will determine the price to be paid for Project Phoenix. I want to spend some time looking at the Confidential Information Memorandum for Project Phoenix provided by Aurora Polaris Bank. The CIM, or the Confidential Information Memorandum, will provide us details associated with the project that we can use to build our model. We will then use that model to determine the purchase price that we should be paying for Project Phoenix. A summary of Project Phoenix is as follows. Project Phoenix is a 25 megawatt DC, 20 megawatt AC solar project located in Fignosteen. This country is located in the southwest of the United States of America, approximately 497 kilometers west of Los Angeles. Fignosteen is a wealthy island and has aspirations for 100% renewables by 2030. They've been aggressively pursuing this goal, and Fignosteen Power has been procuring renewable energy through multiple requests for proposals over the last 10 years. Fignosteen uses US dollar as its functional currency, and Project Phoenix received a PPA from Fignosteen Power in 2016. Information regarding the project life is expected to be 30 years. The project can sell into the merchant market, which is estimated to be between $25 per megawatt hour and $40 per megawatt hour once the PPA expires. The project will be using SunPower A Series 400 watt panels. SunPower offers a 25-year warranty on the panels. The expected panel degradation per your independent engineering report is 0.5%. And once acquired, it is anticipated the construction can be completed by December 31st, 2019. COD is expected to be January 1st, 2020. We Develop Hard Inc., the original developer, has defaulted on a term in the PPA. That term which they defaulted upon indicated that COD, or commercial operation, had to occur no later than 3 years from the effective date of the PPA. Effective date was April 30th, 2016. The result of the default is that Project Phoenix is now available for acquisition. The following information can be found in the data room: an executed EPC contract for 99 cents per megawatt DC, interconnection submission and work done by Fignacine Power, a financing term sheet provided by Fignacine Bank, Phase 1 ESA, and an independent engineering report prepared by Archimedes, Inc. An excerpt of the independent engineering report shows that the power production is expected under a P50 scenario to be 50,370 megawatt hours and under a P99 scenario to be 40,073 megawatt hours. A summary of the PPA is as follows. The offtaker is Fignacine Power. The PPA term is 20 years. The project size is 25 megawatts DC or 20 megawatts AC. And the PPA price is $72.50 per megawatt hour, and there are no liquidated damages in the PPA. Our construction cost summary, we can see in the table we've got our nominal cost for our EPC contract, our other costs, interconnection costs, etc. And then we've got $1 per watt DC and $1 per watt AC calculated here. This $1 per watt DC and $1 per watt AC is really good for benchmarking across jurisdictions and benchmarking across your own jurisdiction, the jurisdiction that you're looking at, to see if the costs that you have for construction are appropriate or not. A summary of the tax rate is as follows. You can see in the first two columns, Class A through Class E, and the depreciation rates for each of those spanning from 5 to 25%. Bryce Stonerhouse Loopers LLP performed an analysis of the construction of Project Phoenix and concluded that the total construction cost could be separated out in each of the tax classes per the percentages in the third column there. Fignacine has a tax rate of 25%, and cash can be repatriated to your home country tax-free. Finally, operating expenses can be summarized in the following table. You'll use these operating expenses in your model to finalize your asset price or the purchase price that you would pay for the solar asset.
Continue learning. Join CFI today.